Hey, what's going on, guys? Simple Forex here, back for another video. I was doing some trading this morning and I took a nice little simple trade on US30. I made an easy $2,000 on the day. If you stick around to the end of the video, I'm going to show you exactly the strategy I used and how I compiled everything together to give me the highest probability outcome, which in turn allowed me to take that trade. And you guys are going to get to see how you can take those types of trades to make you easy money and grant you the ability to grow your account and get to a point where you can make $1,000, $2,000, $3,000, or $5,000 a day. So stick around to the end of the video. I'm going to show you exactly how I did that. Okay, so firstly, I want to talk about the first concept of taking a high probability setup. So one of the first confirmations we're going to go over that can help to attribute and add to your probability and give you the higher outcome of probability is going to be following the direction of the trend. So when I'm looking for a trade, I'm looking to add as many of these confirmations as possible to give me the highest outcome probability. So I like to think of all these different confirmations when I'm trading. That way, when I add them all together, I know that, okay, this confirmation says we're going to go into a sell. This confirmation says we're going to go into a sell. This confirmation says we're going to go into a sell. And when I have all these confirmations together, it helps. So one of the confirmations that you want to use is following the direction of the trend. So if you're looking for a sell in a specific area, looking back at the trend and asking yourself, are we in a downtrend? You know, because if you start taking a trade and you're in an uptrend and you want to go for a sell, now that uptrend is actually working against you. So now this is a lower probability setup. Because if you think about it, if the momentum is already in a bearish direction, it's going to be harder for price to actually turn around and go the other way rather than continue on in the same direction. Now, obviously, every trend has its end, but if you're taking trades in the same direction as the trend is going, it is going to help you in the long run, because probability says that when there's all this pressure and momentum already in that direction, it is going to help to add to your probability when you're taking a sell. So like when we take a look at these charts, we can see, you know, price is in these trends. It was in a nice little downtrend there, nice little uptrend here, nice little downtrend here, nice little uptrend here. Now, as you can see, the point where price actually turns around and goes the other direction, like here, and like here, like here, like here. These points are where the trends turn around. So these points are much smaller than the points where price is going in that direction. So like price is headed in a downtrend here, headed in an uptrend here, headed in a downtrend here, headed in an uptrend here. So as you can see, the probability of price continuing in the same direction is much greater than price turning around and going the opposite direction. So as you can see, it would be better for us to take a trade in the direction of the trend because we have much more momentum already pushing in that area. Now, if you're going for a sell, you're most likely not going to have the trend helping you in any sort of way. So this is one of the first confirmations that can help you to assist you and give you higher probabilities. Knowing that, we leave that to the side and we know that following the trend direction can help to add and increase your probability. Now, this is just one of the confirmations we used. Picture if we can combine a bunch of different confirmations like this is where you're going to get those high probability setups and in turn make you money. Now remember, we're going to go ahead and we're going to take a look at that trade in a minute. I'm going to show you exactly how I did it, but first I want to cover some of these higher probability confirmations that are going to assist in making you grow your account. Okay guys, if you haven't taken advantage of this deal already, I would highly recommend that you do. AAAFX still has a 30% deposit bonus going on right now, and it's going to help you to protect your account from losses, and is also going to help you to increase your leverage and in turn trade higher lot sizes and make more money. Go ahead and sign up with them today. Take advantage of that bonus while it lasts. I literally made a $1,000 account myself, got that $300 deposit. I was able to use that to my advantage and flip my account. I think I ended up flipping it to $2,000. And now I'm going to continue to use that account anyways, do some more trading with it. I would highly recommend you take advantage of this bonus while it lasts because it's not going to go on forever, and they've got this good bonus going on right now, so take advantage of it while you can. So the next confirmation that's going to help to assist you in increasing your probability for your trade is going to be paying attention to highs and lows and paying attention to the most recent high or low, and then asking whether the low has been broken or not. So, let's just use replay mode here just as an example, and we'll scroll back. And just as an example, now you want to look in the past and ask yourself whether a high or low has been broken previously. Okay, so looking at the charts, we want to figure out where the highs and the lows are. So there was a high here, a low here, high here, low here, high here, high here. Okay, so it's important to look back and ask yourself, has a high or low been broken? And if so, was it a low or is it a high? Now, if you're looking for a buy, you want the most recent break that has happened. You want the most recent break to be a break of a high, because that signals that the momentum is bearish because we are able to break high. Now, looking previously, the most previous one we have here was a high. Was this high broken? No. We have a low. Was this low broken? No. We have a low. Was it broken? No. It's important to remember that we want to see true breaks, and that was not a true break. For a true break, we have to see a close of a candle, and then we have to see another candle close below the breakout candle. We need to see that happen for it to be a true break, but we did not see that happen. Break of that high? No, there was no break of that high. Was there a break of this high? Yes, there was a break of this high. So the most recent thing that has happened was a break of a high. Now that signals that we are having more bearish momentum to the upside, because it means we are strong enough to break through high, and a high signals that we are going up. And if we're able to break a new high, then we are continuing to go stronger and stronger. Looking back, we were in a downtrend and now we're in an uptrend. So just based off those two confirmations alone, we have more of a bias that tells us price is more likely to continue higher than go lower. So right off of just trading off of that, we could just trade strictly off of those two confirmations alone, and then continuing forward, we'll see that price is more likely to go higher than it is to go lower. So as you can see, we just won our trade based literally just off of two confirmation. And that's literally just because we're adding together probabilities. That's all we're doing. We're adding together probabilities, and it's giving us the outcome of a certain direction. Now, if we were in a downtrend there, and the most recent high or low that was broken ended up being a low, that means the more momentum is towards the downside. So that would give us more probability of taking a trade to the downside. Just based off of two confirmations, it has already increased our chance of winning a trade. So this is what I'm saying. It's really important to add these confirmations together to give you a higher probability, because that's what trading is about. It's all about probability. Okay, that is just one example, but you can go ahead and backtest it yourself. You will see that testing that theory alone, you will get more wins than you will losses, just based off of higher probability. Now, obviously there, your take profit and your stop loss is going to be important. That's something you can learn over time. But today we're just covering confirmations to help increase your win rate. One final confirmation that we're going to talk about, and these were only the confirmations that helped me to win the trade that I did today. I can name a ton of other confirmations, but I'm going to save those for other videos. Today, we're just covering the main confirmations I used to make $2,000 today. And here's the thing. I just showed you two confirmations that helped make me win a trade. You only need a solid 3 or 4 confirmations per trade to help to give you that confidence in having a higher probability setup. Now, there's a bunch of different confirmations that will help you, but today I only used 3 main confirmations that helped me in my trade and gave me a high probability setup. So those are what I'm covering today. So for the final confirmation, we've been talking a lot about divergence recently on the channel, and today I want to talk about continuation divergence. So continuation divergence is, let's say you are in a downtrend. Now, let me just replay this a little bit just to clean it up and make it a little bit easier to look at. So whether you're in a downtrend or uptrend, it doesn't matter, but we're going to use a downtrend here as an example. When you're in a downtrend and you want to give extra confirmation that price will continue to go in a downtrend, you're going to look for this. You want to look for continuation divergence, and it basically just helps you to reassure you that price will still continue down and will still have more momentum to the downside. So you're going to mark out the highs to the highs like I do here. And here, and here. We're just going to mark out all our highs here. From a high to another high, from a high to another high. So as you can tell, all of these highs to another high are all pointed in the downward direction. The only one that's not pointed in the downward direction is this high right here. this high to that high right there is in an upward direction. So we're not going to pay attention to this because we only want to look at the highs that are going to a downward direction. Now, if we want to be reassured that price will continue in the downwards direction, we are going to look towards the MACD, and we want to see that the high is going to a high in an upwards direction. We have a high going to a high in an upwards direction. It means that the next move is going to have some force to the downside. It tells us that there's going to be more momentum to the downside. Now, you can take some time to study some of this yourself, and it works the same way in an upwards direction. Everything is just flipped. You'll want to see a low going to a low in an upwards direction, and then you'll want to see on the MACD that it's going to a downwards direction. So this tells us that the next move is going to have some more bearish momentum to it. Okay, so now you guys are probably curious, what is this trade that you took this morning? I want to see it. I want to see how you did it. Well, you guys already know how we did it. I just taught you everything you need to know. So we're going to break it down here real quick. This is the trade I took this morning on US 30, and simple as always, super simple here. We were in a downtrend. Let me just clear this up a little bit so it's easier to see. We were in a downtrend already previously, and I was looking to sell because I already told myself, okay, we're in a downwards direction. That already gives probability that price will continue in the downwards direction. I was looking for a break of a low. Here was our previous low. We had a break of that. Boom. We had another break here, but this was not a true break yet. So the most recent break was a break of a low. So that told me, okay, we have a lot of bearish momentum because we were able to break a low. Now, the third confirmation for me was seen over here. We have a high going to a high in the downwards direction. And then we had a nice little high going to a high in the upwards direction. And that was enough for me to go, okay, we still have more bearish momentum. So I'm going to go ahead here and I'm going to take a sell. I took a nice little sell here, and then all I did was run price down to this spot here where I felt price was going to react quite a bit off of. It reacted a little bit off of here and then continued down. Now it's back up here, holding strong right there. But that was a nice easy trade for me, and it's everything that I literally just taught you guys was in this trade. So it's simple as that. Take higher probability setups. It's going to help you in the long run.